printed circuit board prototype, one of them, and 5 production model circuits. So how are we going to show this increase in inventory that Sock Stereo now has? So we're going to basically show our inventory increased 3,800. And we owe accounts payable 3,800. Now, we're not just dealing with the actual merchandise. There's some other expenses involved with getting the merchandise to us. One is called freight. Now, based on how the freight is defined is who pays for the freight. As you see here, when it says FOB shipping point, what that means is it's free on board until FedEx, UPS, a carrier picks it up from the seller's place of business. Okay? So ultimately, the buyer's paying the shipping. It's free on board till the shipping point, which is the warehouse door of the sellers. Okay? So the buyer's paying that shipping. The ownership of these goods passes to the buyer when the public carrier accepts the goods from the seller. So title has passed when those goods get on the truck. We would at that time record this inventory in our books. Even though we don't have them in the warehouse, the title passed at that point. Does that make sense? Yep. FOB shipping point. The title passes when it hits the carrier.
Well, if you say you're recording them on your books at that point, so in that scenario, $3,800 because it's passed, right?
Because it's
then
passed.
Would you not record your account or your accounts payable until you get an actual bill in the mail? Because that's not going to happen until they don't bill you right away.
Okay, so let me just.
I mean?
I'm assuming the bill came.
Okay.
The bill came, but normally we don't record transactions until we can realize them, until they're realized. In this case, we own those goods when it hits the carrier. Okay, so technically they should be in our inventory. Okay? In the next case, FOB destination, the title or the ownership of those goods does not pass to us until they hit our shipping dock. FOB destination means free on board until it reaches us. So that means the seller's paying for those goods. Make sense? So this is important as far as knowing when do we have ownership of those goods. We have ownership of those goods when the title passes. And the title passes based on how it's being shipped, the terms of the shipping agreement.
What would Amazon be if you bought something from Amazon?
We pay for it.
Well, that's what I was going to say. Is it different if you get free shipping versus? I mean, I guess
I get what you're saying.
Always paying for it, but it's
technically you're paying for it. You're just paying for it with the $60 Prime.
Okay.
So now.
And by the way, in case you guys didn't see the news this week, Minnesota's now charging sales
tax. I saw that.
For Amazon.
If Amazon has a location here, I'm sure they do.
Oh, they have to. They're just too big.
So most people, I think, I guess I would think that until I get it, I'm thinking from a consumer that it's their responsibility or whatever, you know what I mean? But in this scenario here, it's almost like when it leaves Amazon, it's like, so would it be up to me to track down FedEx and, you know, I mean, file a claim or, I mean.
Yeah, depending on how the arrangements are set, determines who's responsible. So for example, my sister purchased a bunch of cabinets through this Home Collectors, and she was responsible for the shipping. It got damaged. The carrier took care of her. Okay? She was ultimately responsible because it was free on board to the shipping point. But because the carrier screwed up, damaged the goods, they're going to make it right with her. Make sense?
Yeah.
Okay, so know the two different
The manufacturer can screw it up.
methods. Assume upon delivery of the goods on May 6th, Sock Stereo pays Public Freight Company $150 for freight charges. The entry in Sock's books for the freight is a debit to inventory for $150 and a credit to cash for $150. Freight is part of the inventory cost to get those goods placed in service. Assume the freight terms on the invoice had required PW Audio Supply to pay the freight charges. Then PW Audio Supply would treat it, because this is the seller, PW Audio Supply would treat those freight charges as a debit to something called freight out and a credit to cash. Okay? Now, when we're dealing with purchase returns and allowances, we purchase something, we don't like it, it was the wrong thing we ordered, we return it. Purchaser may be dissatisfied because of defective, damaged, whatever. So they want to return those goods. So let's say they return them for credit. If it was made on credit or a cash refund, we'd have a cash allowance, return. Now, sometimes we may choose to keep the goods, but we're going to want some type of deal from it because they were inferior to what we really ordered. So we can either return them or allow for an allowance, you know, getting a reduced price on those purchases. So there are two ways you do it. You can return the goods or you can keep them and want some type of reduction in the price. Let's assume Sock returned the goods. What's going to happen? We're going to debit our accounts payable. We don't owe $300 of it anymore because we're returning the goods. And we credit inventory for $300. We're just reversing that portion we're returning. In a perpetual inventory system, a return of defective merchandise by a purchaser is recorded by crediting inventory. Okay? This is under the perpetual method. When we receive inventory, we're going to debit inventory. Any freight we pay for, we're going to debit inventory. When we return it, we credit inventory. Easy. Think of perpetual inventory. Perpetual inventory. Okay?
Can you give us an example of a business that would use periodic?
Viking Man, I am right on this. Next. Isn't it fun to have small classes? The dynamic is just so different. Viking Man, chill. So, credit, okay, let's talk about purchase discounts. So, what does it mean a purchase discount? If we pay within a certain period of time, we get a % off. So, credit terms may permit the buyer to claim a cash discount for prompt payment. It saves money and it allows the seller to get their money quicker. So it's better to give them a % off, get the money sooner. Cash is always king. So here's an example of a discount. It could show 210 net 30. What that means is you get a 2% discount if you pay within 10 days. Otherwise, you pay the full amount within 30. Okay? So how that works is 210 net 30, 2% discount within 10 days. Otherwise, you owe it within 30. 110 EOM means 1% discount if paid within the first 10 days of the next month. N10 EOM, net amount due within the first 10 days of the next month. I'll be honest, I don't see this very often. I usually see the 210 net 30 or whatever it is. Sock Stereo pays the balance due of $3,500 gross invoice price of $3,800 less what was returned of $300 on May 14th, the last day of the discount period. We're going to show the journal entry to show that we got that discount. So we're going to show the full accounts payable of $3,500. We're going to credit inventory for $70, our discount, because we're not really paying. We're paying $70 less because we're paying it ahead of time. Okay? And cash of $3,430. So basically, think about it. If originally we purchased the goods for $3,430, we would have shown inventory of $3,430, accounts payable of $3,430. Instead, we were showing greater inventory, but if we pay it sooner, we get a deal. So we're going to reduce the cost of our inventory. Makes sense, doesn't it? If stock failed to take the discount, then it would just be accounts payable, $3,500, cash of $3,500. Nothing changes. Okay? Make sense? Now, should we take the discount or not? Usually it is to your benefit when you really play out the interest rates. 2% on $3,500 is $70. If we invested $3,500 at 10% for 20 days, it's $19. So what we're seeing is it's usually always advantageous to take those discounts. Because if we held our money in a bank account, we could never make that kind of money on it. Am I making sense?
Kind of, but then why do they offer discounts if it's so clear?
Because people don't always have cash. Everyone wants to hold on to their money. Let me put this on pause.